Investing Beyond the Basics, a comprehensive guide to funds and strategies. Investing is a journey, and having a robust toolkit can empower investors at all stages of their financial life. From exchange-traded funds, ETFs, to real estate investment trusts, REITs, individual stocks, business development companies, BDCs, mutual funds, and index funds, there are diverse investment options to suit various goals. In this article, we explore the basics of these investment vehicles and provide tailored investment strategies for new investors, experienced investors, early retirees, and those nearing retirement. 1. Exchange-traded funds, ETFs. Basics. ETFs are a collection of assets, stocks, bonds, or commodities that are traded on stock exchanges, providing diversification and liquidity. Investment strategies. New investors start with broad market ETFs to achieve instant diversification. Consider S&P 500 ETFs for exposure to large-cap U.S. stocks. Experienced investors dive into sector-specific or niche ETFs to fine-tune your portfolio. Explore technology, healthcare, or thematic ETFs based on your expertise. Early retirees balance growth and income. Consider dividend-focused ETFs for steady income and growth-oriented ETFs to preserve your nest egg. Near-retirement investors focus on risk management. Use bond ETFs for stability and gradually shift toward income-focused ETFs. 2. Real estate investment trusts, REITs. Basics. REITs are companies that own, operate, or finance income-producing real estate. They offer investors a share in the income produced. Investment strategies. New investors start with diversified REIT ETFs to spread risk. They invest in various real estate sectors. Experienced investors invest in individual REITs if you have expertise in specific property types, such as residential, commercial, or healthcare. Early retirees look for REITs with consistent income streams to support your retirement needs. Near-retirement investors focus on low-risk, income-generating REITs, and consider those with a history of steady dividends. 3. Individual stocks. Basics. Buying shares of individual companies means owning a portion of that business, with the potential for capital appreciation and dividends. Investment strategies. New investors start with well-established, dividend-paying companies. Research and diversify your stock picks. Experienced investors focus on growth stocks or value stocks, depending on your investment goals. Early retirees consider stocks with a history of dividend growth and stable earnings. Near-retirement investors shift toward dividend stocks with lower volatility. 4. Business development companies, BDCs. Basics. BDCs are publicly traded firms that provide financing to small and mid-sized companies, often offering high dividend yields. Investment strategies. New investors begin with BDC ETFs to spread risk, especially if you are new to this asset class. Experienced investors select individual BDCs after thorough research and analysis of their investment portfolios. Early retirees prioritize BDCs with a history of stable dividends and well-diversified portfolios. Near-retirement investors favor BDCs with lower risk profiles and a focus on income generation. 5. Mutual funds. Basics. Mutual funds pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. Investment strategies. New investors opt for actively managed mutual funds with experienced fund managers to navigate market complexities. Experienced investors consider index funds or ETFs for cost-efficient, passive investing, especially in well-established asset classes. Early retirees balance income and growth by investing in a combination of bond and equity mutual funds. Near-retirement investors prioritize capital preservation with a focus on bond and income-oriented mutual funds. 6. Index funds. Basics. Index funds track a specific market index, providing broad exposure to a particular asset class or sector. Investment strategies. New investors choose broad market index funds to keep it simple while achieving instant diversification. Experienced investors fine-tune your portfolio with sector-specific or thematic index funds. Early retirees Balance growth and income by investing in a mix of equity and fixed income index funds. Near retirement investors. Focus on risk management by shifting toward income generating and stable index funds. Conclusion. In conclusion, the world of investments offers diverse options, each catering to different financial goals and risk appetites. Whether you are a new investor, seasoned in the market, aiming to retire early, or nearing retirement, understanding the basics and tailoring your investment strategies can help you build a well-rounded portfolio that aligns with your unique financial journey.